Hey traders, this is John Howell here from tradinginvesting4you.com. Anything I do say in this video is general advice only. You do know the stock market is risky, don't you? Right? So it's not suitable for all trading accounts, and you must understand that there is risk to all trading no matter what you are doing, okay? No matter what the marketing says, there is risk to all trading. Fantastic. Let's move into this video. We are going to be talking about AMT or Ameritrade, okay? Or Ameritrade, and we're going to be seeing exactly what that particular stock is doing, okay, what the stock is doing, and where it's likely to go moving forward, okay. But before we do, just to let you know, at the end of this video I'll be telling you more about a free 2-hour training event that we're giving away for free, okay. It's a free completely 2-hour training event teaching you details of 2 different strategies that can help you move forward when trading the markets. Fantastic. Okay, so let's actually move into now the actual chart itself. So right now we're looking at a weekly chart, okay? We can see up the top here, we're looking at a weekly chart, and that simply means that every single one of these bars, this bar here and this bar here, simply represents a weekly bar, okay? Simply represents a weekly bar. So let's actually, what I like to do first on any stock is to squeeze it up as much as I can to get a good view of it. So I can see what's going on there. And the first thing I can see here is that we've had this market on is AMTD, Ameritrade, has actually been sideways for quite some time. You can see it's made a high up here of around the sort of 22.23 level, okay, 22.50, 22.60 level. Made a high up there. And you can see it's also made a low down the bottom here as well too. Majority of this whole point since actually 2006, 2005, 2006, has actually been in this wide channel. You can see here from $14 right now. Okay, so $14.20 up to around about $22, $23. So that's where the actual range. This is a massive range here, and this continues to be in a sideways movement. So it doesn't look like this is actually continued to move up or continue to go down. Now the interesting thing is this. What we're looking at right now is we're looking at a potential head and shoulder formation. Moving forward on the weekly chart. Let me show what I mean here. Let me just open up the chart a bit more. Okay. And a head and shoulder formation pattern is actually bearish. Let me show you what I mean here. You can see how this market it ran up, okay, and then it ran back down, okay. It gave you a peak, gave you a trough, it ran back up, gave you a higher peak, but then ran back down, gave you a higher trough, ran back up, and now it's actually coming back down to give you a lower peak, okay. So if we have a look at that, it looks like a bit of a head and shoulder, right? We have our left shoulder here, we have our head here, and we have our right shoulder here. It's a big head and shoulder pattern. And a head and shoulder pattern is generally a rounding topping pattern, okay? So if you have a look at this here, market's round through there, okay? It's going through there. So what we can see now is we can see this market trying to form what we call a completed head and shoulder. Let me show what I mean by completed. Right now we can see, if we have a look at the last sort of 2 to 3 years, the majority of the sideways movement has been around about here, as you can see, okay? This sort of last couple of years, so this little bit through here, okay? Bit through here, and we did break down, right? But then it rejected it, came back down, rejected it a second time, and then broke back up, bounce, and then bounce through here, right? So what we call this here in the actual head and shoulder formation, we have our shoulder, head, shoulder. What we call this is our neckline. And now what will happen a lot of times is the market will come down, it will find support around this neckline, and then it'll continue back up, okay? So therefore it's not a completed head and shoulder. Normally a head and shoulder is a very reversal signal. So if the market's going up, it's going down. So to me, we need to wait for it to be completed. Completed simply means that it breaks below this support level here, around about $15. We actually get a nice break below and a close below here. If that's the case, then we could see projections of all the way down to at least sort of $10 to $11, okay? That's the projections there if we did see that. If not, then it looks like we could race back up. If we form a little support here, we could race back up towards the highs up here, somewhere as well too. Okay, so make sure you keep an eye out for that. And no matter what stock you're trading, you can always use this pattern to understand what's going on. Everyone out there has told you like it's a head and shoulder, it's a head and shoulder, so therefore it's like it's reverse. And that's actually not true. It needs to be a completed head and shoulder first. Completed simply means it breaks below the neckline. A lot of the times, once again, a lot of times it'll come back down towards the neckline. It'll hold there and it'll just shoot back up in the other direction. Where most people try to go short, think it's going to go down. In this case scenario, what happens is that it just continues back up. We need to wait for the close below this neckline, and if that's the case, then we're likely to see in the next, because this is a weekly chart, remember, we're likely to see some decent move to the downside. Okay. Anyway, that's it for me. I hope you've enjoyed this video. That's Ameritrade for you, or Ameritrade for you. Okay, AMTD on the US market, and I want to say that I hope you find these videos instrumental, and make sure that you use these techniques. Okay, because no matter what, when trading, we need to be flexible. Okay, and also we need to adapt to what the market's doing. So when looking at this here with shoulder, head, shoulder, just make sure you keep an eye out for that completed head and shoulder. If it does complete, then we're likely to see a lot more downward movement to $10 to $11. If it doesn't complete, then we're likely to stay in this sideways range here. As you can see, it's been back here for quite some time, this sideways range all through here. Okay, all through there. That sideways range, we're likely to stay in that for quite some time. Okay. Okay, fantastic. Okay, so what you see just below this video, if you're watching this video on YouTube, you can see there's a link just there. See that link? See that link just right there? This link right here. This link right here is actually just below this video. Make sure you click on that link just below this video. Okay, that will take you over to a registration form. That registration form is for a free 2-hour training event where I'm going to teach you 2 unique strategies that will give you advantage on most traders out there. When you actually see these strategies, you will know exactly what I'm saying. This is absolutely free. There's no catches, nothing like that. It's absolutely completely free, and it's just to help you out there. Okay, so make sure you go take advantage of that just below there. Okay, fantastic. Okay, well, I'm out of here. If you want to check us out on our website, it's tradinginvestingforyou.com. You can check us out on our Facebook, where our community of traders are hanging around, which is facebook.com/share trading mastery. And if you don't know where this video came from, this came from YouTube, and our YouTube channel is youtube.com/trading and investing. This is John Howell here. I'll see you in the next video, and no matter what happens, say this to yourselves every morning, every afternoon, every evening, and that is, success can be yours if you go claim it. So step up, take massive action, and face your fears today.